Ladies and gentlemen, good day and welcome to the Tube Investments Q1FY23 earnings conference call hosted by IIFL Securities Limited. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anupam Gupta from IIFL Securities Limited. Thank you and over to you, sir.
Thanks, Ranju, and welcome everyone to Tube's 1Q23 conference call to discuss the results. From the management, we have Mr. Vellayan Subbiah, Executive Vice Chairman, Mr. Arun Murugappan, Chairman, Mr. Mukesh Ahuja, who is the Managing Director, Mr. Mahendra Kumar, the Chief Financial Officer, Mr. K.R. Srinivasan, who heads the Metal Products business, Mr. K.K. Paul heading the TI Cycles business, and a few other members from the team. I'll hand over to Mr. Vellayan for the opening comments, and post that we can take the Q&A. Over to you, sir.
Anupam, thanks, and good morning, everybody. So basically, we had a good quarter with a PBT before exceptional of 180 crores. Revenue for the quarter was at 1,957 crores compared to 1,257 crores for the same period previous year. Obviously, as you all know, last year we had the COVID situation, so the numbers are going to look a bit stark. PBT was at 180 crores as against 130 crores in the same period previous year, and ROIC was at 48% for the quarter compared to 41% in the previous same year period. Free cash flow for the quarter was at 139 crores. With that, we'll just get into each of the individual businesses. The good thing is that free cash flow is also back to its higher and strong levels. The engineering business, the revenue for the quarter was at 1,244 crores compared with 815 crores in the corresponding quarter, and PBIT for that business was 118 crores as against 83 crores for the corresponding quarter. Metal Formed had revenues of 335 versus 245 in the corresponding quarter, and PBIT was at 38 versus the 26 in the same quarter last year. The Cycles division had revenue of 246 during the quarter compared with 172 in the corresponding quarter, and profit was at 9 crores versus 7 crores in the same quarter last year. The other businesses had revenues of 223 crores compared to 88 crores, and PBIT was at 17 crores as against 10 crores in the corresponding quarter for the previous year. At a consolidated level, the revenue for the quarter was at 3,799 crores as against 2,437 in the corresponding quarter, and the profit before share of profit of an associate joint venture, exceptional items and tax for the quarter was at 342 crores as against 192 in the corresponding quarter in the previous year. CG Power and Industrial, a subsidiary company in which we hold a 58.05% stake, registered consolidated revenue of 1,665 crores as against 1,050 crores, and its PBT was at 172 crores as against 71 crores in the corresponding quarter last year. And Shanti, which is also a subsidiary, and we hold a 70.47% stake there, had revenues of 99 crores during the quarter as against 67 crores, and PBT for the quarter was at 18 versus 12. Commenting on the financial results, Mr. M.A.M. Arunachalam, Chairman, said despite the continuing changes in supply chain constraints, fuel and commodity prices, the company has witnessed steady performance during the quarter. Growth was higher in the domestic market in engineering, metal formed and industrial chains. The previous year was also affected partially due to COVID. The company is also making steady progress on its launch of its EV three-wheeler and tractor products. The performance of our subsidiaries, CG Power and Shanti, have been very encouraging, delivering strong growth and profitability across all segments. So Anupam, that's a quick kind of summary of quarter performance, and with that, we'll be happy to take questions. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Jinesh Gandhi from MOFSL. Please go ahead, sir.
Hi, sir. Can you talk about the export? How was the growth in this quarter? Which segment of exports are doing well?
Yeah, so I think that's a good question. And actually, engineering, there's still been kind of an inventory, there's actually too much inventory had built up, especially in the European market, especially for growth in the engineering business. The industrial chains business has had great exports. But for commentary on the engineering exports, I mean, we really think it's going to pick up in the third and fourth quarters. But on specific numbers, if you'd like, Mukesh or Murli, kind of if you guys can just jump in, that'd be great.
Like Velen told, this particular quarter we see because the inventories are piling up and there is a lot of fluctuation in the commodity prices. The steel prices also come down, which going to neutralize in another 1 quarter, and after that we see demand is strong. And particularly in OEM side, engineering has done a good job by taking customer approvals on the OEM side, and that will continue to drive the growth for exports going forward.
And also last year, Q1, we had some pent-up demand also. So in comparison, that can also be affected.
But honestly, I mean, yeah, we do see a strong second half from an exports perspective right now, especially with what's going on in this Ukraine-Russia thing. I think second half will be very strong.
Sure. But can you share what was export as percentage of total revenue, standalone revenue, and what was the decline in exports or growth in exports, whatever that number is?
For company as a whole, it was around 16%. If you see engineering alone, it's 21%.
Okay. Got it. Second question is on the on the railway business. Are we starting to see some traction in terms of order coming through because some of your peers, not necessarily in the same segment of railways, has started to see substantial traction in order coming from railways. Are we also seeing the similar traction there?
Yeah, KRS, do you want to take that? No. Okay, KRS is not on the call.
KRS is there on call, boss. I will take this question. Yes, you are right. Railways, there is a traction which is improving compared to the previous quarters, and new tenders have started getting released. And that is getting released with even the better price points because the commodity prices are also softening it. So going forward, we'll see the railway business will also pick up starting next quarter.
Got it. And lastly, can you talk about your approach to investments in TI2, given that in 1Q itself for around first 4 months, we have already invested close to 250 crores, plus there will be further investments in E3 and lenses that way. So how should we look at TI2 investments? We have talked about the base investment of at least 200 crore per annum, but how do you approach given so much happening on that side of the business?
Yeah, so Jinesh, I think there are two trends happening, right? One is that, like we said, we don't see that much. I mean, though we have, still a pipeline in TI3, we don't see that much activity on TI3 right now, just because kind of a lot of assets we feel are, fully valued, right? And so we're a bit concerned about kind of going into an asset on that side now. And given that, we're seeing a lot more opportunity on the TI2 side right now. So obviously, kind of the biggest area of spend has been on electric vehicles, and we think that will continue to be our biggest area of spend. And so over time, our vision is to kind of get into at least 4 platforms. We've already announced, right now we've announced a 3-wheeler, we've announced tractor, we've announced the heavy commercial vehicles. through tractor and heavy commercial vehicles were through acquisitions. So we do see a fourth platform as well. And so we see that as consuming kind of a large chunk of our TI2 capital. We will obviously kind of we continue to hold the same prudence, right, which is basically we've said that we will not exceed 2 times free cash, right, and now as kind of our debt. So I think capital efficiency wise we'll continue to kind of maintain that, but we definitely see a lot of opportunity in electric, and we are going to invest in that. Our sense is to take each of these platforms to market. We're talking about roughly about 250 crores each, which means 1,000 crore outlay to get 4 platforms to market. Then we'll see how those platforms scale, and then accordingly basically see where we need to double down and invest more.
Right. And when you're talking about the fourth platform, that's the two-wheeler side, right?
Sorry, two-wheeler?
The fourth platform in EV side?
No. So we can also say that we're not doing two-wheeler.
Oh, okay.
We see the two-wheeler space as too crowded, right? I mean, we've always said that we're more interested in the productive side of the spectrum than the consumptive side. And we see the two-wheeler side as too crowded, and we don't see profit pools in that sector, for the foreseeable future because, there's just too much venture capital money going in, and we just kind of, the rate at which these guys are kind of losing money, Jinesh, that's not the kind of business we can play in. We are still kind of old school. We'll still have to make money. That's kind of the way we look at it.
That makes sense. That's more sustainable way of getting into business. There's a few more questions. I'll fall back in queue. Thanks.
Sure. Thanks, Jinesh.
Thank you. Next question is from the line of Aman Agarwal from Carnelian Capital. Please go ahead.
Good morning, sir, and thanks for the opportunity. So my question was on TI2 initiative, and it is from a medium to long-term point of view. So if I see our non-EV businesses like the truck building business, the TMT bar business, and the optic lens business, so when the opportunity for the truck body and TMT look smaller, but they do seem good in terms of ROC kind of profile. While the optic lens business looks very scalable. So how are we thinking about this businesses in terms of strategy? Are we focusing on better returns, or do we think of this as very large businesses to scale and contribute meaningfully in terms of the bottom line of the company going forward?
Yeah, so I think it's a good question. See, honestly, I would say 2 things, right? One is that, the businesses did get derailed quite a bit due to COVID, right? And I would say we lost almost kind of 2 years and kind of all of the businesses due to COVID. The second is that we're seeing kind of differential levels of scalability, like you correctly pointed out, between the 3 businesses. Of the 3, the optic lens business is the most scalable. The challenges we've had with optic lenses is basically, like we said, kind of it's all imported equipment. Nobody else makes these things in India. So basically, we're very dependent on basically either Koreans or the very few people. All the equipment was Korean, so we're very dependent on those people coming in and setting up and getting the factory going. And there's been a massive reluctance in a lot of these guys to travel. So that is what has delayed that project significantly. In the sense like the factory is up, but we're not able to get it to full production. I do believe that business is going to be immensely scalable, but it is delayed, right? And with the other businesses, also they got kind of quite derailed due to the whole COVID scenario, because obviously kind of with truck consumption coming down, with a lot of things coming down, basically those businesses got quite derailed as well. So I would say that now is our time to kind of rebuild. I don't think the other 2 businesses are going to be as scalable as the optic lens business. So of the 3, I would say the optic lens is going to be the most scalable.
Thank you for the answer, sir. It was really helpful. And my second question was on our EV businesses. Now we are into 3-wheelers, tractors in the CV segment. So what is the strategy in terms of EV? Do we want to become a very major player? Do we want initially to focus on South region, which is our dominant region, and later if we are good with the product, then expand it nationally. And also like in terms of tractor and MHCV, like the EV penetration is expected to be slower. So, and given the product is not even at a full scale, even at global level, so do you think we'll need to spend more on R&D and other expenditure on tractor and MSME segment going forward, like apart from the already 600, 700 crores we have already invested in the EV business?
Yeah. So definitely these businesses are going to require R&D investment. Second, in terms of you asked, what do we want to be in these businesses? Our belief really is that the future is going. I mean, we are at a significant stage of kind of disruption in the industry, and if you look at what's happening globally, also you're going to see new global majors get defined in new categories of space. Just like, I mean, everybody kind of only talks about Tesla, but each category by category, we see what's happening with Rivian now. Category by category, people are basically there are new companies that are beginning to acquire a significant market share. So our objective with which we're going in is definitely to be, a very at-scale relevant player. So there is no other way we're looking at it, right? Saying that, we see an opportunity where, there could be a redefinition in terms of who the largest players in the country are in the whole, commercial vehicle segment. And we see definite opportunities for ourselves, right? Does it require, so your second questions were, in some of these areas, there's not been global penetration. You talked about tractor and heavies. I definitely think that like what happened with some of the other technologies, including kind of mobile telephony, I think India is going to start playing a significant lead role in electric vehicle if we look at the next 10 years. And one of the reasons why we believe that is because if you take categories like tractor, I don't think there's going to be another natural leader that basically kind of comes out, right? India is the most logical. We sell the most tractors globally. And therefore, for India to lead makes the most sense, right? And, even with heavy commercial vehicles, the kinds of use cases, right? Because if you take what happens in the West in general, heavies run really long distances at very high speeds. And therefore, battery consumption tends to be extremely, extremely high. But there are a lot of use cases, especially even in India, where these heavies run point to point, right? And so you have them running, like 150-kilometer routes from a steel factory to a port. And they just kind of keep running across these points, right? And so that makes it more feasible to convert certain categories first and then other categories later, I think, to heavies, to electric more easily. And so we are quite keen on being the leader in a lot of these categories. And does that mean it's going to require R&D? Yes, definitely. And we will have to invest in that to kind of make it happen.
So thanks. That was really useful. Just one final question. So since we are getting into this OEM business now, and being an auto anchor, we cater to most of the players in two-wheeler and other segments. So players like Bajaj, who is already in the two-wheeler but is also in three-wheeler, where we are getting into the business. And again, players like Tata Motors and where we are getting into the CV side. So do we see any chances of them taking business away from us, from the auto anchor business?
Yeah, so I think that's a valid question. If you look at kind of I just look at the way the world is evolving globally, and I think that, the example I like to use the most is that of Samsung, right? Which is, if you take an Apple iPhone, the largest supplier for the Apple iPhone, and I still believe that that's the case, though I'm not sure now, but a significant supplier to the Apple iPhone of components is Samsung, right? And yet, kind of iPhone's biggest competitor in terms of kind of completed OEM phones is also Samsung, right? So I think the way the world is evolving now, everybody has to cooperate with people in some way, has to compete with people in some way, right? And I think that is the way the world will continue to evolve because of the way technologies are going, right? I mean, a lot of technologies are becoming very platform oriented. And honestly, right now, we have no scale compared to any of those guys, right? So kind of, I don't think, right now, Tata would even see us as kind of a credible threat, right? Kind of at this point in time.
Understood, sir. That was really helpful. I'll join back in the queue. Thank you.
Yeah, thank you.
Thank you. Next question is from the line of Jitendra Khatri from Tata Mutual Funds. Please go ahead.
Yeah, hello. Sir, are you doing something on the light commercial vehicle side? Because Bosch is trying to do something on electric out there.
Mm-hmm.
Yeah.
Yeah, so there's nothing specific that we've announced or
Okay.
talked about on the light side.
Okay, and on the heavy commercial vehicles, so let's say if Ashok Leyland and Tata Motors ramp up their effort, so how do you plan to compete in the futures?
Yeah, I think that it's similar to the question that's just kind of
Okay.
was asked,
Okay.
right? In the sense, like, basically everybody will be getting into it, and
Okay.
different people will take different approaches, right? So
Yeah.
which segment they choose. So we've chosen a particular segment to go after in heavies to start,
Okay.
starting with a 55-ton truck. And
Okay.
then, then we will see how those segments evolve over time.
Yeah.
But it is going to be a market where you're going to have new entrants compete against incumbents. And that's the way a lot of these markets have been globally.
Okay. And so just in case hydrogen and fuel cells, etc., if they manage to make inroads, so are you ready for the technology in the 5531 segment?
Yeah, so, I mean, the good thing is if a hydrogen fuel cell came
Okay.
about, right?
Yeah.
The entire drivetrain.
Right.
So basically what you're going to have is you're going to replace a very large battery today with a hydrogen fuel cell, and in heavies, I think it'll still be a battery because you won't be able to get enough supercapacitors in there unless supercapacitor prices come down. But I think basically more of what will happen is that you'll replace a very large battery with a hydrogen fuel cell and some kind of storage, which will be a smaller battery, right? So from that perspective, the fundamental design stays the same even if we go into hydrogen fuel cell. But as you know, I mean, the belief is that hydrogen fuel cell is still at least about 5 years out, especially, because of the infrastructure required to kind of get that going.
Okay. And lastly, sir, what's the internal gestation period which you keep as a benchmark for TI2 for a new business?
So I'll tell you, we're also learning in that process, right? Now, when we get into any one of these new platforms, we've said that, within 6 to 9 months, we'd like for that platform to generate revenue, right? But also what we're kind of seeing on the truck, on the whole vehicle side is that, the homologation process has its own timeline, right? So, and you can't get a product to market till you have it homologated, right? So the good thing with a 55-ton truck is that we already have a homologated product, right? Tractor is not homologated yet, right? So tractor will take longer because of the homologation cycle. So I think that is the constraint function. So I think it can take up to a year after acquisition to basically get a product to market.
Okay. And I was asking actually more broadly for your entire TI2 and for example, your optics, etc. So broadly, what is the gestation period you have as an internal target?
So I don't think we can take gestation period, right? Because anyway, if you ask, you want to get it going, as quickly as possible or within 3 months, right? But if you see what happened with optics, honestly, kind of there was a real misfortune in terms of timing, right? Which is, just after all the equipment started coming in, COVID hit, right? And then we just had no way of even starting up these machines because nobody even understands these machines in India, right? Nobody else. Right. So so this thing is kind of is gotten hit by over like 2 years just in that process. And honestly, so I think kind of there is a gestation period we would like, but I don't think that that's going to happen on a lot of these products.
Okay. So thank you so much. Thank you very much.
Thank you.
Thank you. Next question is from the line of Dhruv Maheshwari from Premji Invest. Please go ahead.
Hi, team. Thank you so much for the opportunity. My first question to the team is, generally, if you can speak about the two acquisitions this quarter, IPL Tech and Moshine. Typically, what are the capabilities and the end game that we would have thought of? And just a follow-up on this one is, when we acquire, say, a controlling stake in such companies, do we try and keep the promoters on board to run the business, or what's the thought process there? That would be helpful to know. And then I have another question. Thanks.
Okay. So I think the first question is, what is the logic and the capability in Moshine and in IPLT, right?
Yes.
Okay. So IPLT, I think we just talked about it. They have a homologated 55-ton truck. Okay. They have an older version of that truck, which was a retrofit that is already kind of in the market, and so it's been running for close to 2 years. About 20 trucks are out there. And so our intent is to basically now manufacture this homologated truck and use it for, and sell it to basically customers who have these point-to-point applications, right? So basically, the ideal targets are, basically steel, cement. A lot of them have this point-to-point application, and for the point-to-point application, the economic benefit of an electric truck is already real and current, right? So there is real economics in getting this product out to customers immediately. In parallel, we would basically start developing other products that we think will be ready in a 12 to 18 month time frame from now. Right? So is that clear on IPLT?
Yes, that's very clear. Thanks.
On Moshine, basically they have the capacity to make the smaller, the lower end mobile camera modules. And the intent there is to become a camera module provider, to start at the lower end and then work our way up the chain. So that is the quick intent with Moshine, but I'll be happy to and so they already have a manufacturing facility in India making these lower end camera modules. And so we will continue with existing customers and then build up on that.
So is it fair to say that this could be complementary to what we are trying out with Lens, or this is going to be a separate sort of...
Yeah. No, you're right, in the sense that, basically now we will go full spectrum on lenses, because basically those are glass lenses, these are plastic. But it gives us the opportunity to go full spectrum on lenses in the future.
Understood. And just in terms of running these businesses, would the existing sort of promoters continue to run them? Or?
So it's a valid question. Obviously, kind of the existing promoters will continue to have a role, and in some cases will continue to run. It depends fully on kind of on the capability of the existing promoters and their kind of so they will continue to have a role. In some cases they will run, in some cases they will be part of the team.
Understood. Thanks. And just one on the EV bit, you talked about the 4 platforms that we are planning to launch. Still early days, but are we looking at a sort of common distribution network? And because now that we're moving from an ancillary to an OEM, are there challenges when we sort of are setting up or preparing for our distribution? If you can share your thoughts, that would be helpful. Thanks.
Yeah, so obviously so will it be a common distribution network? These are very different products. So for the most part, there will be separate distribution networks as well. And I think the second question was a bit unclear. You're saying will there be challenges setting up the distribution network?
Yeah, are you facing any challenges? Like we would have started off 3-wheelers. What is the feedback?
The experience has been fantastic to date. So it's been a very good experience.
Got it. Thanks a lot. That's all.
Yeah.
Thank you. Next question is from the line of Niket from Motilal Oswal AMC. Please go ahead.
Yeah, thanks for the opportunity.
Oswald is dominating over here, man.
Okay, now the previous one was sell side. This is my side. So yeah, just one question on IPLT. Just want to understand. You highlighted most of the points, so largely it's covered. Just wanted to get a sense on order book. The product is very known, and whatever checks you've done, I think they have a very healthy order book, but the issues on production. So, are you going to invest more to ramp up production capacity?
Yeah, absolutely. So that's the first thing we will do. We're already looking at a production facility that we can get ready in about the 8 to 9 month time frame. So volumes will remain muted till we can get that production facility up. Obviously, we'll continue to keep you updated as we kind of get that, a second facility up, which will still be kind of smaller than a full large-scale facility, but it will ramp up the capacity significantly from current levels.
Yeah, and would it be possible for you to share what's the order book for them?
We're not sharing yet. I think kind of you give us a little bit more time. I think maybe next quarter we'll share a more comprehensive order book.
Sure. The second question was on margins. So I think broadly this quarter, safe to assume that margins would have bottomed out and the benefit of the lean program that we are doing should incrementally start flowing in the next quarter, as well as the numerator denominator impact starts to come in a favor.
Yeah, I mean, I think kind of Mukesh, I'll let Mukesh answer that.
Regarding lean, these are the early days. Like you rightly said, the benefit has started flowing, but we have a long way to go on this, and there's a good headroom available leveraging the lean journey to improve the margin side of the story. And like you rightly said, the commodity prices is creating some issues on numerator and denominator, and that depends on the external environment, how the commodity price goes up. But we are making sure that absolute margins are always protected, or it is improved year on year.
So EBITDA per ton, if I want to look at it, that's only improved because then that is the right metric. Based on a numerator denominator match. So EBITDA per ton in the last 2 years would have seen improvement.
Yeah. So for this is Mahendra here. See, we have a different mix of products. So EBITDA per ton may not really apply to our industry. It may work for a commodity industry like cement or steel. We have different types of products, different types of valuation on products also. So that may not be the right metric.
Sure. Got it. The other question was on the medical devices part of the business, which is already kind of talked about in annual report. And would it be possible for you to give us some flavor on where are we going in terms of tie-up and some clarity on that would be very helpful.
See, basically, we're going to drive that through kind of acquisition to begin with, because we don't have any capability internally. So we don't really want to comment on it till we first get a specific transaction that we're going to close on. And so we're still looking.
Okay, got it. One more question, just one question to squeeze in. On the two-wheeler side, what's the share as a percentage of revenue today? Because that is one category which just doesn't seem to grow. And at least that part of revenue will continue to see maybe lower growth. So is there some game plan that we have to maybe add customers or increase the market share within those customers to ensure that?
I don't think we discuss kind of revenue, market share at a product level, and we prefer not to. So I think we have a decent market share, but obviously in all of the products that we always are looking at opportunities to expand the market share.
Sure, but on the category itself, would it be possible to quantify what is the percentage contribution coming from two-wheel now?
Sorry, what is the percentage?
The percentage of revenue coming from two-wheel
comes from two-wheel.
Yeah.
Is that your
question? Yeah.
Mahendra, have we shared that before?
So if you look at the total TA revenue, roughly about 58% comes from auto. And within auto, it is like generally 50-50, but keeps varying from quarter to quarter. In Q1, it was like 55% two-wheeler and 45% four-wheeler.
Okay. And have you started taking orders with our electric three-wheeler? Has that already started? The booking, like the soft booking as such, or that's not yet?
Oh, electric CVs?
Electric three-wheeler.
Oh, electric
three-wheeler? Yeah, the Montana one, basically.
Yeah, either Paul or Sushant can answer that. Okay. I don't know if Paul or Sushant are not on the line. So to your question, we've appointed dealerships. We haven't started taking orders yet, and I think we will likely start taking orders in the September timeframe.
Okay. Perfect, sir. Thank you so much, and I'll come back with you, sir.
Thank you.
Thank you. Next question is from the line of Mr. Nishit Jalan from Axis Capital. Please go ahead.
Thank you, sir. Thanks for the opportunity. Most of my questions have been answered. Just one on the engineering segment. That segment, we have seen very, very strong growth, both on a YOY and QOQ basis. And you just highlighted that export is something which was not very, very strong in this quarter. And we do get auto industry volumes from industry body, and we haven't seen industry-wide growth very strong. So just wanted to understand what is the volume value growth in this segment, and are we basically, have we introduced some more products, or are we gaining disproportionately in large dia tubes or any sub-segment within engineering? Because obviously we are growing at a much, much faster pace compared to auto industry growth.
Okay.
Like we said earlier, there is some amount of gain in shares in the domestic market that's reflecting in the total overall revenue increase. Also because of the commodity prices, the turnover is going up. So it's a mixture of two. And like we started taking around the engineering business 2 years back, the regional balancing story. We start producing closer to the customers to optimize our cost structure and improve the delivery and the quality which is closer to the customers. That is the yielding result. So it's a combination of commodity prices going up as well as gaining share of business.
So would you be able to share a breakdown between volume and value in the engineering segment on a YOY basis or QOQ basis, whatever you are comfortable with?
Generally, we don't share those breakups, but indicative directionally, it's a combination of two.
Sir, if I can squeeze in one more question, this has been asked multiple times in one way or the other. It's an IPLT on the truck side. So basically just wanted to understand, IPLT hasn't done much fundraising in the past, yet they have come up and developed this 55 ton of product, new product as well as retrofit. So what is the core advantage, competitiveness that IPLT has built? Have they kind of mastered any of the specific critical component, or is there any technology partner? Basically, how have we gone in terms of building capability that's across different components or vehicle design per se?
Yeah, so I think it's actually, and you're right, they've done it with very little capital. But I think that's what you're going to see happening in India, right? Which is, I think at least from what we can tell, the brilliance in the IPLT product is that it's very catered towards Indian use cases, right? And especially kind of starting with these point-to-point use cases, right? Because if you had a product, for example, that you try to sell in Europe or the US, which had like 180 kilometer range, they would not, a heavy duty truck with 180 kilometer range, there won't be massive demand for it. The second thing is even getting to 180 kilometer range, how you get there. I mean, the bottom line is, because in India there's so much more braking on the highways, there's a capability to get a lot more regen. And then the third component I actually think is that though there is no specific IP, for example, it is like, there's no IP in terms of a component that is very specific. The way the components have been stitched together, we think is very intelligent, right? Because they've actually been able to do that using kind of sets of Indian components, sets of imported components, and bringing it all together in a fashion that I think is economically kind of, and just from a physics perspective and from a market perspective, the right product for India. And I think that is what is possible. I mean, a lot of people call it frugal engineering or what you may, but I think that's what is possible to do in India. And that's what a lot of the new players are going to start doing, right? So that's what we think is kind of good with the way IPLT has done it, and that's where we see the opportunity.
Thank you, sir. So just one follow-up, and sorry for harping on this. Just conceptually, if IPLT, obviously their team would be very good. If they can do such innovation with such small amount of capital, do you think there are enough entry barriers in place in these kind of products? Or and if not, don't you think that even this segment can get crowded over a period of time, and the profit pool may not be big enough? Because it's credible that they have done such a good work with small amount of capital, but if there's no IP or no major competitive advantage, then would entry barriers not be low in this segment?
See, the point is this, right? I mean, if you look at kind of what's happened is that you got to recognize kind of, if you take the two-wheeler space, for example, I don't know how many two-wheelers there are electric two-wheelers, but when we last did a sweep, I think there were over 80 products that were out there. Okay. In heavy-duty trucks, right now, there's only one that's homologated, right? And so, are there going to be other guys? I think in every market, potentially, yes, there will be other people, right? But we're also seeing right now what's happening is that the whole venture capital space is also drying up, right? So there aren't that many guys who just want to experiment with nothing. And in our minds, it takes at least 3 years to get this product right, which is how long IPLT spent on it, right? I mean, IPLT has actually spent closer to 5 years on this, right? So in our minds, it takes that long to get the product right. And so it's not going to be that easy for somebody to just come in and say, listen, I'll piece together kind of a motor, a controller, a BMS, battery, and kind of, I'll have this thing going. So, we feel like the segments we're getting into have higher barriers to entry than kind of, the two-wheeler or the passenger, which we think will be globally led. And therefore, that's our belief. I mean, but there's no telling that, we're 100% right on this.
Thank you so much. So I have some more related questions on this, but I'll probably take it offline with you.
Sure.
Thank you so much for that.
Thank you. Thanks so much.
Thank you. Next question is from the line of Senthil Manikandan from iThought PMS. Please go ahead, sir.
Hi, good morning, and thanks for the opportunity. So my question is with respect to the EV tractor side. So if you can just give an overview about what would be the target addressable market over the next 3-5 years. So currently, annually, the tractor market size is around 9 lakh units. So just to overview on the volume and how the market will progress on the EV side. Yeah, thanks.
See, I think none of these questions can be answered deterministically, right? Because, I mean, if I knew how the market was going to progress, I think very few people know, I don't think anybody knows how the market is going to progress or what the actual rate of adoption is going to be. Obviously, in our minds, it's dependent on how good a product you can get out and which segments you can cover. There are, in our minds, 4 product ranges that have to be got out there, and the initial product range might not cover as much of the market, but the largest is going to be that 30 to 40 horsepower segment, and then a 45 or a 40 to 50 horsepower. So there's one product that is the closest to homologation right now, and then there are 2 more that we will submit within the next 6 months. But the rate of evolution of the market, I don't think we can state deterministically right now, nor do we want to say, here's how much our market share is going to be. We just want to focus on being the first to market with a product and ensuring that it's a good product, and then capturing the proportionate market share for the product we get into market with. So we're going to start with the lower horsepower products and then work our way up.
Okay, sir. Yeah, thank you.
Thank you.
Thank you. Next question is from the line of Sunil Kothari from Unique Investment. Please go ahead.
Thanks for the opportunity. Are you getting my voice, sir?
Yeah, okay. How are you?
Yeah, thank you. Fine, sir. Sir, my question is a little bit longer term and macro. Since you turn around Chola, and Chola Group has proven their capability internally in terms of engineering, services, exports, and everything. I want to understand the two trends which we are hearing is China plus one, Europe plus one, manufacturing base from say India, whatever or what products you manufacture, whether it's a chemical or pharma or engineering, lot things we are hearing. And second trend we are hearing is people want local manufacturing more. They don't want to depend on so much disruption of this supply chain which we faced during last 2, 3, 5 years. So with your vantage point, can you elaborate on this opportunity for Chola Group from expert's point of view?
Yeah, I mean, I think if you see our articulation of vertical selection, the businesses we're getting into, they are almost kind of driven by these trends, right? I mean, so basically, we honestly think that the whole electric vehicle market in a lot of categories, including the ones we're getting into, are going to become kind of a fully Indian supply chain over the next 5 to 6 years.
Mm-hmm.
So that's why, PG will kind of understand, how can we make motors and controllers. But all of these are things areas where India has more capability today. So similarly, we talk about the reasons we're getting into electronics and medical. It's the same thing, right? China plus one. Everybody is very keen on, so even if you take something like Moshine, everybody Indian supply for mobile phones. Now almost all of the mobile phone components are imported from China, right? I'd say in excess of 95% of mobile phone components come from China. Over the next decade, that entire supply chain has to be developed in India. So, we need to think of how that's going to happen. Similar with electric vehicles, the entire supply chain needs to develop in India. Indian OEMs need to emerge. So how is that going to happen? And even with medical, though there's going to be a large Indian market, with all these three products, we are convinced that if you develop the Indian market, that will form a strong base for allowing us to get into other markets like the European markets, American markets especially. And that's very similar to what we've done with tubes and engineering, where we developed for the Indian market first, and now we're beginning to push 20% exports, and then we'll push to 40%, 50% exports over the next 5 to 6 years. Right. So basically, it's a very similar story, and we've identified, a set of verticals which we think, at least over the next 15 years, gives us significant opportunity. First, to establish a base in the domestic market, and then use that base as a mechanism of getting out along this kind of what we think is going to be a very, very broad China plus one trend over the next 15 years as well.
So, sir, basically, other than your internal capability, which already we have proven, you see external tailwind is also helping us in terms of this manufacturing products, say mechanical products, engineering products, bigger parts. Those are also, there is a good tailwind for...
Undoubtedly. And I think that this tailwind is really going to be very significant in India for the next decade.
Great, sir. You're doing commendable job. Wish you good luck. Thanks a lot.
Thank you.
Thank you. Next question is from the line of Vipul Kumar Anupchand Shah from Sumangal Investment. Please go ahead.
Hi, sir. Congratulations for great set of numbers. My question is on the heavy truck side, we'll be launching only one model, the 55 tons, or we'll have an entire range starting from 10 tons to 55 tons?
So right now there's only one model that's homologated in the 55 ton. So we'll be focused on getting that to market first. So that's our focus right now. And then over time we will have to develop, but right now there's only one model that's homologated.
Can you comment on the cost advantage in terms of percentage?
So what we're
that
seeing
particular
is a payback time of 2.5 years on this truck for the use cases that we're looking at right now. So more than that we don't want to share, but we're seeing a payback time of 2.5 years.
2.5 years of payback time. Okay.
Yeah.
Okay. Okay, sir. Thank you and all the best.
Thank you.
Thank you. Next question is from the line of Abhishek Singhal from Naredi Investments. Please go ahead.
Good morning, sir. And before asking question, I have a small suggestion. You will give investor presentation with your result, then it will be good for a small investor like us.
Sorry, I couldn't hear the same. If you give the investor presentation
with your result, then it will be good for a small investor like us.
Okay.
And first question, year-to-year margin in mobility and power business has decreased. Then what will be the margin in FY23? And second question is, how much a turnover will come from electric truck and electric tractor in this year, and have started producing them?
Okay. So your first question was on. So let me answer your second question. We don't want to give any. And so the numbers from electric vehicle sales in this financial year are not going to be so significant. So we don't want to give any numbers at this point in time. We see numbers, revenue numbers ramping up only from next year, from the April time frame. Though we will have some revenues this year, we don't want to it's not going to be significant. Your first question, if you could just repeat, sir.
Year-to-year margin in mobility and power business has decreased.
Power business? You're talking about CG?
CG, yeah. So then what will be the margin in FY23 is same as June 22, quarter 4 last year.
Okay. So I think, so power you can actually kind of look at as the same revenue now. I mean, same margin number that we kind of reported in the first quarter. It might improve a bit, but not significantly. Mobility, Mukesh, do you want to give a perspective? The question is on margins. I think margins also will remain similar to what they've been in the first quarter, right? Could improve a bit, but not much. Thank you.
Thank you. Next question is from the line of Vinod Malviya from Union Mutual Funds. Please go ahead.
Thank you for taking my question. And I'm extremely sorry for harping again on IPL tech. So I have just a couple of questions on IPL. First, I mean, as you rightly said, that this product has been there in the market for last 2 years, and whatever reviews even we came across on the internet has been very good. Just wanted to understand both from a company's point of view and even from the use case point of view, what are the current challenges which is there? Is it like the total cost of ownership is very high over here compared to the existing series, or and even from an operational point of view for the existing the old promoters, what were the challenges and why they have completely exited? I mean, almost 2/3 have been sold to you. I just wanted to understand the thought process over there.
Yeah. So first off, the promoters are not completely exited. They are still there with a significant kind of portion of the shares. So that is, and they are integral to kind of the future of this company. So they're with us in this entire process. And Subodh is basically leading the company and kind of going forward. Your question was, kind of all of the reviews are positive. What are the challenges is what you were asking. So I think kind of, there are two things kind of, it basically is working capital and then capital required to kind of set up a new facility. So it was very tough from a working capital perspective to continue to produce these trucks, which were expensive. And then the company did require capital to set up a new facility, which we will be kind of putting in as well.
Okay. But as far as use case is concerned, when we do a comparison between a normal commercial vehicle And an electric commercial vehicle, there's absolutely no disadvantage for electric vehicle. That is a normal feedback which you're getting on the product.
Yeah, we don't see any. I mean, obviously, kind of you will lose some of the payload because of the weight of the battery, right? That's purely the downside.
Okay. And just clarification on the previous answer which you said. So you plan to expand the capacity. So are you giving the numbers, like what kind of capacity addition will happen in the next 1.5 years, or what kind of investment
we
will
don't
be
want
doing?
to state that yet, right? It's still early days, so we don't want to state that yet.
Okay. Yeah. Thanks for that. That's all for me.
Thank you. Next question is from the line of Ankur from Future Investments Private Limited. Please go ahead, sir. Mr. Ankur, please go ahead with the question.
Yes, thanks for the opportunity. Sir, can you please share some guidance on the revenue and the margin side for the next 3 to 5 years?
Sorry, you just want broad guidance on revenue and margins for the next 3 to 5 years?
Yes, right.
Yeah, I don't think we just give any broad terms like that. I think broadly what we've articulated around the 4 metrics, continue to kind of hold, right? Which is the revenue. See, again, revenue growth, we've always said, you have to look at that now at a console level. So broadly on those 4 items, we continue to hold with what we've articulated from the beginning.
But do we see the margins going up?
Sorry?
Do we see the margins going up?
Yeah, we've said that also, no? Which is in the next kind of, in the next 3 to 4 years, yes, we will expand margins as well.
Okay, great. And what kind of market share are we aspiring to capture in the next 5 years in the EV?
In the EV?
Yeah.
Yeah, I think it's very difficult to tell at this stage, no? Kind of nobody even knows how many products are going to be out, what percentage of conversion to EV is going to be. So it's a very difficult number to give right now.
Okay. Thank you so much. Thanks and all the best.
Thank you.
Thank you. Due to time constraints, we have reached the end of question and answer session. I would now like to hand the conference over to the management for closing comments.
Yeah, I mean, Anupam, nothing specific from our side yet. Thanks. I think hopefully we've answered most of the questions. We continue to be, quite very optimistic about the long term. I think quite a few questions were, specifically on how quickly we'll be able to kind of, or what market shares we'll be able to get in some of these new segments. I think that's a bit more difficult to state deterministically right now. But, our focus is on building for the long term, and we continue to be very bullish from that perspective.
Sure. Thanks, William, and thanks for the time.
Yeah, thank you. Thank you so much.
Thank you. On behalf of IIFL Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.